You still leaving your money sitting in the bank, earning almost nothing while inflation eats away at your purchasing power month after month? Have you ever stopped to think about why your balance grows so slowly, even after years of hard work and saving? If you feel like you're always chasing financial stability but never managing to make your money truly work for you, then this video was made for you. Today, I'm going to show you 4 assets that yield more and are safer than leaving your money in savings or a checking account, and that can genuinely multiply your wealth over time. And the best part, these alternatives are accessible to anyone, including those who are just starting out in the world of investing. We're going to talk about real opportunities like REITs, investment funds, dividend stocks, and even peer-to-peer lending, which are already changing the lives of thousands of young people who decided to step out of their comfort zone and make their money grow intelligently. Stick with me until the end and find out how you can start investing in these options and take an important step toward financial freedom. You're here because you want to multiply your money and escape the trap of low bank returns. How many times have you looked at your savings account statement and realized that your money barely grew? And worse, with inflation, it's worth less and less. But what if I told you there are assets that can not only protect but also multiply your capital with more security than you might imagine? In this video, I'll introduce you to 4 investment options that far outperform the returns of traditional banks. So, stay with me until the end, and don't forget to leave a like and subscribe to the channel so you don't miss out on content like this. The problem is simple. Most people still believe that leaving money in the bank, in savings, or in checking accounts is safe and enough to ensure a financially stable future. But this is nothing more than a myth. Your idle money is losing value every day. Our goal here is to show you solid alternatives with real potential for growth and wealth protection. And to do that, let's get straight to the point. REITs, investment funds, dividend stocks, and peer-to-peer lending. But first, drop a comment below. Where do you usually keep your money today? Let's start by talking about REITs. Imagine having access to large real estate projects without having to buy an entire building or a shopping mall. That's exactly what REITs allow. They are investment funds that put money into income-generating properties and distribute profits to investors, often in the form of monthly dividends. And you know what's even better? The entry barrier is much lower than you might think. While a physical property can cost hundreds of thousands of dollars, with just a few dollars, you can invest in a REIT and receive a share of these profits. Hit the like button because this is just the beginning. The second asset you need to know about is investment funds. They work like a financial pool, where multiple investors contribute money together and a professional manager decides where to invest. There are fixed income funds, multi-market funds, currency funds, and stock funds. The big advantage here is automatic diversification. Even if you don't have much money, you can invest in a broad and well-structured portfolio, reducing risks and increasing the chances of good returns. Now, if you found this interesting, just wait for what's next. Make sure to subscribe to the channel because there's still a lot of valuable advice coming your way. And now, the favorites of those seeking financial freedom, dividend stocks. These are shares of solid companies that distribute part of their profits to shareholders on a regular basis. Here, we're talking about building a true passive income machine. By reinvesting these dividends, you further accelerate the growth of your wealth over time. A classic example: companies in the utility or banking sector that have been consistently paying dividends for decades. Those who invest in them see their money working for them. Drop a comment below. Do you already invest in any dividend-paying stocks? The fourth asset is peer-to-peer lending, or simply P2P lending. Essentially, you lend money directly to people or businesses and receive interest in return. It's an alternative to the traditional banking system, with the potential for much higher returns than standard fixed income. Specialized platforms facilitate these transactions and offer opportunities with different levels of risk and return. Of course, each case needs to be analyzed, but overall, it's an intelligent way to diversify and seek higher returns than the banks offer. Are you enjoying this so far? Then hit that like button to support the channel. Now, let's dive even deeper. Before investing in REITs, for example, it's essential to understand the real estate sector and the fund's history. Some REITs invest in commercial properties, others in hospitals, shopping malls, or even data centers. Each sector has its own dynamics and economic cycle. Logistics warehouse REITs, for instance, have grown significantly with the rise of e-commerce. Have you ever thought about owning a piece of that growth? This is where research and choosing the right asset make all the difference. And if you want to learn more about selecting the ideal REIT, subscribe now because we'll be bringing you videos dedicated to this topic. For investment funds, the key is understanding the fund's profile and its manager. Some funds aim for security and stability, while others take more risks in pursuit of higher returns. Here are real-life examples. A fixed-income fund that invests in government bonds is suited for those seeking safety, while a multi-market fund may invest in stocks, currencies, and fixed income simultaneously. And the result? A much higher return potential than savings accounts, without you having to make all the decisions yourself. Leave a like if this tip expanded your perspective. For dividend stocks, the winning strategy is dividend reinvestment. Imagine receiving $500 in dividends and reinvesting it all in more shares. The following year, you'll earn dividends on an even larger number of shares, and so on, creating a snowball effect. Want a practical example? Those who bought shares of major banks 10 years ago and reinvested the dividends have already doubled or even tripled their initial investment, without even counting capital appreciation. Want to learn how to apply this strategy correctly? Then comment below, "I want to know more." When it comes to P2P lending, understanding credit risk is crucial. Choosing reliable platforms and diversifying across multiple loans can significantly reduce risks. Some P2Ps focus on small and medium-sized businesses, others on personal credit, and even agricultural credit. Each segment has its own characteristics, but in general, returns are much more attractive than those offered by banks. And of course, the key is to start with smaller investments and gradually increase as you gain confidence in the process. Share this video with someone who needs to know about these alternatives. Now let's talk about an essential mindset for those seeking financial freedom. Stop thinking like a saver and start acting like an investor. Many still believe that saving means security, but in reality, it's the opposite. Inflation erodes your purchasing power, and you end up working twice as hard to achieve half the results. If you want to break out of the cycle, you need to make your money work for you by using assets that yield above inflation and put you on the right path to financial independence. If this makes sense to you, go ahead and hit that like button, and let's keep going. Another crucial point: understanding the importance of compound interest in any of these investments. Time is your best ally. The sooner you start, the greater your results will be in the future. Even more conservative investments, when combined with time and compound interest, can generate incredible returns. That's why you should never underestimate the power of starting small and gradually increasing your contributions. Subscribe to the channel for more content like this. We also need to talk about liquidity. Some of these assets, like stocks and funds, offer daily or weekly liquidity, allowing you to withdraw your money more easily. Meanwhile, REITs and P2P lending may have longer terms. So, always align your investments with your financial profile and goals. Plan your money for the short, medium, and long term, combining assets with different liquidity levels to ensure flexibility and security. Michael Turner, 34 years old, lives in Austin, Texas, and worked as an IT analyst at a multinational company. For years, he kept almost all his financial reserves in savings accounts and checking accounts with insignificant returns. Dissatisfied with the lack of growth in his money and inspired by financial education content, Michael decided to study more profitable alternatives and diversify his investments. In 2018, he started with REITs, investing in real estate funds listed on the U.S. Stock Exchange, particularly focused on sectors like logistics warehouses and data centers. The result was surprising. With the appreciation of shares and monthly dividends, Michael realized he could generate a consistent source of income. At the same time, he directed part of his capital to dividend stocks, choosing solid companies like Johnson & Johnson and Coca-Cola. The steady flow of quarterly dividends strengthened his cash flow and motivated him to keep expanding. In 2020, Michael diversified even further, investing in mutual funds specializing in equities and technology sectors, taking advantage of the market boom and risk rebalancing. To top it off, in 2021, he started allocating a smaller portion to peer-to-peer lending, investing in platforms like Lending Club and Prosper. Today, Michael earns around $2,500 per month in passive income solely from dividends and profits from these investments, which supplements his salary and brings him closer to financial freedom. His current goal is to live entirely off his investment income by 2028. Jessica Collins, 38 years old, lives in Denver, Colorado, and has always had a more conservative financial profile. For most of her career as a nurse, she kept her money primarily in a savings account and low-yield CDs, fearing the risks of the financial market. But in 2019, after attending a series of investment seminars at the hospital where she worked, Jessica decided to take her first step toward changing her financial reality. She began by investing in REITs, attracted by the opportunity to invest in real estate without having to buy physical properties. She focused on funds related to the healthcare sector and commercial properties, receiving monthly dividends that were reinvested. Next, she allocated part of her reserve into balanced investment funds that combined fixed income and equities, helping her reduce risk while increasing her market exposure. Jessica also built a dividend stock portfolio, prioritizing companies in the energy and utility sectors, which are known for stable payouts. In 2022, she diversified even more by entering the peer-to-peer lending market, lending small amounts to individuals and small businesses with good credit ratings. Today, Jessica achieves an average annual return of 10% with her diversified portfolio. Her profits have allowed her to travel more, reduce overtime hours at the hospital, and increase her retirement contributions. Her goal? To continue expanding her investments until she can comfortably live off her passive income in the coming years. If you truly want to take a step further and deepen your knowledge of the assets I mentioned, there are a few books that are practically must-reads. The first is The Intelligent REIT Investor Guide by Brad Thomas. Brad is one of the leading authorities on REIT investments, and in this book, he explains how the real estate market works through publicly traded funds. The book covers how to choose the best REITs, allocation strategies, and how to build a steady stream of dividends from these assets. It's essential reading for anyone looking to generate solid passive income by investing in real estate without the hassle of direct ownership. Now, if your focus is on understanding investment funds and dividend stocks in depth, the classic The Little Book of Common Sense Investing by John C. Bogle, the founder of Vanguard, is indispensable. Bogle teaches in a simple yet powerful way how to build a diversified portfolio with low-cost index funds and ETFs, maximizing long-term returns. He also explains how mutual funds can be used efficiently in the strategy of those seeking security and consistency. Additionally, the book provides valuable lessons on discipline, patience, and long-term focus, everything beginner and intermediate investors need to know to stand out. Oh, and before we move on, if these tips are helping you, make sure to hit that like button and subscribe to the channel, because there's still plenty of practical content coming to help you grow your wealth with more security. Shall we continue? When it comes to peer-to-peer lending, a highly recommended book is The Lending Club Story: How the World's Largest Peer-to-Peer Lender is Transforming Finance by Peter Renton. Renton is a leading expert in the field, and in this book, he provides a comprehensive overview of how P2P lending works and has evolved in the U.S., with a focus on Lending Club, one of the most widely used platforms in the country. The book explains the risks, advantages, and secrets to selecting the best credit profiles, helping investors minimize losses and maximize returns. It's perfect for those looking to start in this alternative market safely. And if you want to dive deeper into specific dividend stock strategies, the best recommendation is Get Rich with Dividends by Mark Lichtenfeld. Considered a complete guide on the dividend strategy, the book outlines a step-by-step approach to building a portfolio that generates growing passive income year after year. Lichtenfeld details how to identify solid companies, evaluate dividend history, and create an automated reinvestment plan. It's ideal for anyone looking to use dividends as a lever to accelerate financial freedom. And hey, if you want more book recommendations like these and other lesser-known strategies, drop a comment below because I can bring a full reading list in the next video. And of course, don't forget to subscribe to the channel and turn on notifications because the upcoming content is going to surprise you. Finally, remember, information is power. The financial market offers endless possibilities for those who study and prepare. And you're already on the right path just by being here and seeking knowledge. Keep educating yourself, diversify your investments, and above all, take consistent action. Did you like this video? Then hit the like button, subscribe to the channel, and turn on notifications so you don't miss any content that can transform your finances. See you in the next video.